Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconen, along with Brianna Valesky. And we have Scott Redler on the line. He's the Chief Market Strategist at T3 Live Trading Group, getting his setups for March in. Scott, how you doing today?
Doing good. Had to wake up 20 minutes extra early to show out the driveway, considering we had another snowstorm. But other than that, we're getting used to the cold weather, hoping that thaws out a little bit.
Okay, you sent us a nice chart here of the S&P cash here, and I'm trying to blow it up here to take a look at it, but why don't you just tell us what this chart, why you think this is significant?
Well, if you look at the month of February, we had February 2nd was the day the market basically switched gears and the bulls knocked the ball out of the Bears' hands. They didn't necessarily take the ball back and start running down the field, but when we had that red zone reversal around 1990, that's when you had to get short off the brain and think about getting long. And then the second day was the powerful day, which showed you that, the bulls do have the ball. It's time to switch some gears and look long. And then, once you get that chart up, you'll see we had a nice commitment consolidation above 2042 before taking out 2064. And, after a whole month, that was a nice move, whereas we petered out last week a little bit around 2119. During that rally, ever since really February 3rd, we've been riding the 8-day moving average, which means things are tight. There's a lot of momentum. There's not a lot of time to buy a dip. But for the first time last week, it seemed like we were a little fatigued and that this trend might get put in jeopardy. So for an active trader like me, I'm watching Friday's pivot low on a lot of indices and on the SPX at 2103 because, we might play around with it today at 2103, but if we get it close below it, you might see a little bit more pressure, down towards the 21-day or at least the test of the prior pivot high, which is 2088 to 2093.
And when you talk about a pivot low, you're talking about a specific low. I mean, I like to calculate pivot points, the high plus low plus close divided by 3. But when you speak and you make a reference to pivot points, it's more of a set number that's determined by the market.
Yeah, everyone comes up with their own pivot type of equation. Really, the pivot low I'm talking about is Friday's low.
Okay.
So where did the market touch on Friday and bounce off of? That's my point of reference, lead going into today, because in order to go lower, you have to trade below Friday's low and stay below it. What it might do is it might trade below Friday's low and, wash a few longs out, come back above it, and then that could perhaps, give you a new spot to buy against. Like just say we go down to 2097 below 2103 and reclaim it later in the day, then all of a sudden we have a high-level flag, kind of like you had back on March 20th when you remember it quickly took out that 2093, put in the low and closed strong. So sometimes you get like a quick little washout through that pivot, and then you continue in the trend. But if you go below the pivot and can't reclaim it, it shows you a little bit of a control change. Not a big one, but, from an active trader, you don't want to sit you never know where it's going to go. So if you see a slight change, you might as well get out of the way and see, how big of a change it actually is.
Yeah, I was kind of frustrated last week. We kept on just hanging above this 2100, 0150, 0275, all these lows, and I'm just thinking, man, it's eventually got to, sit on support for this long. It eventually does take it out. We did go to trading on the lows of the pre-market session here at 21.0050. We'll see if we'll get a little bit of a bounce there. Just going to a couple other indexes here. Triple Qs, take a look at that. Technically, you're seeing the same thing in that as far as holding the support, but not really taking off and testing that recent high.
Yeah, well, in the Qs, you have like 108. 108 for now, 1, 2, 3, 4, for 6 sessions, we've hovered above it. So you had when we broke the basic downtrend way back, almost like 2.5 weeks ago in the Qs on 210. So on February 10th, we took out 104 and then pretty much had a straight line move all the way up above 108. And here we let the 8-day play catch up because we were very extended. No one wants to really buy when you're that extended. So the question is, can it sit on this perch here? So for me, I think if you're long and you're active, you want to trade versus 108. you get it close below 108, then potentially, you might get a retest of that 106 and a quarter, which wouldn't be so unhealthy considering, in the beginning of February we were down around 100. So the question is, how much momentum is going to stay intact, or does some of the air out of the balloon come in to other levels to shake things up, because things haven't been shooken up in the past 4 weeks?
Yeah, I'm looking at that 108 level, and we had 1, 2, 3, 4, 5 lows between 108.05 and 108.23. See, it's trading up a little bit here in the pre-market, but a great level to keep an eye on, definitely in the triple Qs. So let's go into some individual issues here. And you had got out of your Apple, you had hit your target, you were happy with it, you weren't gonna chase it, and boy, hit 133 yesterday. First, I want to ask you, when you get all these, price target increases, does that give you a little bit of a bearish, tone when they're all chasing price here? And also, if you're looking to buy this on the pullback, what areas are you looking at?
Well, I think a week ago, I remember everyone was kind of yelling at me because the stock, I sold it a little bit early after that 3-day move above that 120.50 breakout, and then all of a sudden from 126 to 133, I didn't really touch it. And then it did that small red dog reversal at 133 when it put that high in at 133.60 on February 24th. So that was finally like the break of the momentum. And then last week there was a nice trade on Thursday. If you want to see a textbook red dog reversal, look at Wednesday's low, 128.15. Then on Thursday, it traded below that, stopped some people out, reclaimed it. That's when I got long, but I wasn't thinking that it would run away, so I played it back above 130 and get out of the way. So now I enter this week again flat Apple. So two things can happen. I think it was upgraded with Morgan Stanley giving it a 160 target, so we'll see how it acts in that. If it all of a sudden it goes from up 50 cents, which it is right now, to red, then there's still some more downside work to do. So what I'll do is I'll just avoid it. I'll see if it holds 126.61, which is that Thursday low. If it doesn't, I feel like, the next real support doesn't come in until the 124 area or the 21 day. So I think there's a lot of time between now and the watch. So if they want to consolidate it, shake it up a little bit, when that's what happens when momentum breaks, which it did last week. And I'm going to be very selective. I'm trying not to buy strength and see. Again, does 126.65 hold, or do we get a lower move down towards the 124s, which I would love to try and be a buyer with the same type of strategies we had last Thursday.
Google, big 4-day move after holding a 21-day average, as seen here on your note. Broke out above 540, then 550. Now trying to clear 560. You're getting a little bit of a boost from Barron's here over the weekend, begging the company start using that cash, pay a dividend, maybe buy back some stock here. Are you riding the bullish trend here in Google at 560?
I'm now flat. I actually had a nice trade in February with Google, but after 4 up days, my rule is I usually start selling on the 3rd day. If I'm still in there for the 4th day, that means I really like it. I like to play day 1, add day 2, sell day 3, and then cry if it goes up day 4 and 5. So with Darren's little boost, I wouldn't really chase it here. It is back in the game. It will be on my go-to list. I will probably chart it every day and trade it a little bit more. I'll focus on it more because last year it was out of play. It was horrendous. There was no follow-through, not a lot of momentum. It seems like it changed a little bit of character, this year. So with that being said, maybe, there are 2 spots to watch. Does it really hold a lot higher, which meaning like Friday's low is 557. If it stays above 557 for a few more sessions, then I'll get back in and maybe it takes out Friday's high and gets back closer to 580. If it can't go up on the Barron's boost, then it's a little overbought, and then I'd want to make sure that that 550 area holds, which was the spot that it broke out from last week. So watch to see if Friday's low hold. If it doesn't, I think a better area is a little bit closer to 550.
Netflix. I have not lost any money shorting this yet after the earnings gap and go. Goes to 400, clears 450. Little double top here. I see 486 even, 486.50. That's just shy of the all-time highs in the issue. All-time high for Netflix here, 489.29 here. Is this creeping onto your short radar yet?
guys are asking me if they can short it. Some made money on Friday because a lot of people thought it would go up with House of Cards coming out Friday. So I guess that was too easy. The market tries to beat up on people who think things are too easy. If you look for the first time in a while, Netflix actually had an engulfing day where it opened and it closed below a prior low. So it took out that Thursday low of 479. So now this wide range bar, you can't look into it that much because look where it came from, down in the low 400s. So it can rest, but that type of bar, if I'm playing for strict long side momentum, gets me out of it. And now if you also look, it closed right on the 8-day. Netflix has not been below the 8-day since earnings. So you want to see, does that change? So for today, maybe you'll use 474 as your pivot. Perhaps it breaks a little bit below and comes back above, and then that's the normal C that we've seen since earnings. But if it breaks below and closes below, you could see a retest of the 455 area. So at this point, it's definitely a lot trickier. And just like the whole overall market, whenever you're at highs after a big run, the A-plus setups are far and few to find. So you have these B-minus C-plus setups that are prone to a little bit more risk where it's hard to be long, but almost just as hard to be short. So with Netflix, see if it can stay below Friday's low if it can. Maybe there's a few extra points there from the downside, but I'd rather look to buy it back long at some point where I think the bigger money is.
Do you follow Baidu at all? Looking at the chart on this, it's had some tough times here. It looks like we're forming some support here. Are you looking for maybe a red dog reversal of this, take out that former low and come back above it? Because this one it looks tempting here, but almost looks too tempting.
Yeah, this is, I like to trade Baidu in this momentum when it's above the 21-day where you can buy high and sell it higher, and that hasn't been the case since almost late November. And since the start, since almost most of last year, it's been below those moving averages. So now it seems like it's trapped in this descending channel where you have a series of lower highs, lower highs, lower highs. So if you want to try and buy the dip trade, you have two levels. You could get that red dog reversal if it trades below 202.60 and comes back above it, or perhaps somewhere around that recent low of 199. But to me, it's something if you want to put it in, but I wouldn't expect much. I tried doing this trade with with Baba, when it was going through its descending channel after it peaked out at 120 all the way down. I was buying the lower end of the channel, and it kept failing at the higher end of the channel. And I haven't really touched Baba since like 107-ish. But this type of trade doesn't really excite me because you don't know where that pivot low is going to be. So I'd rather wait for pivot low signal and then wait for it to break its downtrend before it becomes a go-to name again. This has pretty much been on the list, but hasn't been a good trader for a while.
Yeah, let's just go into Baba here real quick. People keep trying to pick bottoms in this, and then it gives you that day of hope that it's going to rally, but then it quickly fades. Getting down near, I noticed last week it got down to 83.88, and the old-time low off that was back in October. You went down to 82.81. Any possible setups here in Baba? I do see a couple daily lows here, but right around Friday's low, 85 even, 85.20, sinking a little bit in the pre-market. Still hands off on Baba.
I always have to just glance at it because for some reason there's always like some kind of potential there. Just because we had such a good trade in last year when it went from 92 to 120, it was fast and furious above the 8-day, and then on that top it's changed. And so right now there's like an eye on it, but there hasn't been one true signal that's held. Every time we get that little ray of hope, like you said, it fails the next day. So I haven't really been doing it. I look at it every day. Either it's going to get interesting if it breaks the IPO low of 82, 81 and accelerates down and capitulates, then it becomes interesting again. But or if it holds it and then I would say breaks this lower pivot downtrend, but that doesn't happen until a move above 87.20 on some kinds of authority, but like real authority. It's got to go and not look back, to get momentum. And I don't even know what the news will be for that. So it's, one eye on and one eye off it just because there's always potential there, it feels like, but it still hasn't given you a true signal to put any real time capital into it as well as money capital.
And Twitter here, you've had the gap and go, and continue a little bit of consolidation. Another go gets to 50, gets to 50.01. Do you put? And it did that on Thursday. I mean, kind of like me, you like to look for particular levels. Do you throw in the whole number theories at all like that in a stock like Twitter? I mean, hasn't been up near 50 in quite some time. Is that something you put any significance into?
A little bit. There's always psychological barriers around whole numbers, and I've been long Twitter for a while, and then I actually put an offer out at 50 and sold 50 and tweeted about it just as a joke, saying, I just wanted to do one sale at 50, and I didn't think it would reverse like that, and I actually got out of the rest of my Twitter when it traded below Thursday's low of 48.64, because to me that shouldn't have happened. So today actually, even with Facebook, a lot of those social media names on Friday gave you a little bit of a blowback pitch. If you look at just say real quickly at LinkedIn, which is the leader of the group, looked great on Wednesday, tried to go on Thursday and break above 272, only sold off the highs and then came back into the base. And right there, that gave me a little caution with Facebook and Twitter, because if the one that has the best technical setup can't break out, that means some of the other ones might not be ready for heavy momentum breakouts. So I think this group is very important to see in the next 2 days or so. Do these charts repair real quick, or do they get pressured? Because sometimes the false breakout leads to a quick reversal type move. So for Twitter, today, tomorrow, let's see how it goes. It closed below the 8-day, hasn't been below the 8-day since, the one that started back on, February 3rd. So doesn't mean game over because it came so fast, but it could mean that it's just not a tight pent-up momentum trade. So I'm going to splotch it around the pivot of 47.96. I'm not long Twitter. If it trades below it, comes back above it, maybe I'll enter it and use today's point of reference as a stop. If it doesn't, I'll wait, because again, it looks like some of these accelerated trends are vulnerable. Market seems a little tired, and these social names had a big move. So you might as well take a little caution to make sure they prove they could hold higher.
Yeah, that 48 to 50 looks like a good range. Chris, we get a question here. You had mentioned BlackBerry here as a potential long here. Looking at the chart, got a nice bounce off the $10 level. Looks like to be running a little bit in trouble at 11. Always talked about as a possible takeout candidate. How you playing BlackBerry?
I got long last week. I kind of thought it could be a late cycle move, because that's what always happens with BlackBerry towards the end of a rally. You're like, oh, what's BlackBerry do? It's got a high short interest, and some kind of article comes out and it runs. So I did buy the options when the stock was trading at 10:30ish. I bought the $10 calls for this Friday last week, and then once it cleared on the news that it was going to be in the Android 1050, I bought the stock, which I'm still in. And if you look at the chart has been consolidating for almost 10 months. People left this for dead. I think, some traders want immediate gratification. They'd love a takeover because then they get paid. But I think at this point, with some of the deals and some of the security issues out there, and what they valued WhatsApp, which are considered to have some of the same type of markets as BlackBerry, I think that you might not even need a takeout. That a one or two more pieces of news, it gets above 11 with volume. Your next resistance is 12, and the measured move of that whole channel pattern is actually 14. So it could be, one of those treasures for trash trade where it's in someone's trash bin, but from here, it looks like you can get a decent return.
Okay, before I let you go, I got to ask you about lumber liquidators. Is this lumber LL? I mean, it had the news last week, and I know you deal with, all kinds of traders over there. Some are going to want to hop into the fray today in this stock. Any words of advice for people that want to hop into lumber liquidators? Trading down 12.43 at 39.43. Bad news last week. Bad piece on 60 Minutes. Any words of advice in LL?
I think if you play with fire, you could get burned. And I have not been a news trader my entire career. Some people love to trade the news because in plays there's action, there's volume, but I typically don't have a feel for some of these names. I like to play names that I know that aren't moving as fast, because everyone loves to make money quick, and so do I. But with things like this, you never know. I'm looking at the chart, and actually it's a little upsetting because you look at the reversal it had on Friday. Okay, made a low, came back above it. This actually is a small red dog reversal, at that 48. So there might even be some traders long that didn't know a piece on 60 Minutes was going to happen, and they're caught in it. But again, if you're going to trade a stock like this that has headline risk everywhere around it, you're either going to get paid well or you're going to get hurt. This is a widowmaker stock, and I don't like to trade widowmaker stocks because I don't want to be a widow.
Right. I mean, it's there's people out there with a lot bigger axe to grind than your 1,000 or 2,000 shares. So great point. Scott Redler of T3 Trading Group joining us here on Benzinga's Pre-Market Prep. Scott, thanks a lot for having us, and we'll have you on again soon.
Sounds great. Thanks for having me. See you next Monday.